What's going on, guys? Welcome back to another video here. So in this one, we're going to be going over one of the most core and super important concepts to trading. And that is going to be how to actually draw support and resistance effectively so that you can use these levels in your everyday trading and actually how to trade them. So in our private community and on our platform, trade1348.com, we receive questions all the time about support and resistance. Now, what I will say right now before we get into the rest of this video, before we explain everything, and I will show you an example of what you guys should absolutely not be doing, I want you guys to think in more generalities in terms of exact. Support and resistance is incredibly powerful at giving you an idea of where price is most likely to either slow down or reverse, but if you have too many levels on the chart and it gives you analysis paralysis, you guys are going to struggle a lot. So guys, without further ado, if you guys wouldn't mind, drop a like down below, drop a comment down below, help spread this information out to as many new retail traders who need to learn these concepts. Subscribe for more videos like this, and let's roll the intro. Now again, guys, before we go any further into this video here, if you guys would like a free month to the absolute best place to come and learn to trade, to the Trade 1348 platform, make sure you guys check out that link down below. You guys see all of the thousands of people printing with it every single day. And if you look down in the link in my description down here, I believe it's the second link, we are really the only people out there that have a fully documented interview with one of their members that have become a millionaire because of the teachings and the tools that we have provided. So if you guys are interested in that, make sure you guys use code GAINS, get access to all of the proprietary algorithms, all the alerts, the real-time unusual options activity, link down below. But what I first want to do with you guys is go over a little bit of some quick examples of exactly what support and resistance are before we come back to them a little bit later after we show you guys what you should not be doing. So coming over to this Tesla chart right here, let's try and find some areas of support. And for this, we're going to be using the daily time frame. The daily, the 4-hour, and the 5-minute time frame are going to become incredibly important later. But for right now, let's just look for areas of support. So what is an area of support? Well, when we're looking at the chart here, an area of support is going to be where most of the time a stock price is going to aggressively change direction, or you're going to see buyers start to step up. So where can we see that right here? Well, Tesla, right around this 206, 207 level right here, we see this drastic sell-off, a bounce back up, and then we see it use this level again as another level of support. The sellers were not strong enough to push price below this level. So what do? We take out our horizontal drawing tool and we draw a little line right here and mark it out on our charts. Now, resistance, going to be the exact opposite. You can see right in here, right around this 314, 313 area here on Tesla, the buyers were not able to push it up through this level, not once, not twice, but 3 times. So what is this going to mean? Well, we take out our drawing tool again, we draw this horizontal line here, and now we have a level of resistance. Now, we're going to come back to this in a second here, but what I want to show you guys right now is something that a lot of new traders do, and it leads to analysis paralysis. We're going to go over to the NVIDIA chart right here. This is a drastic example, but if your charts look like this, stop. Don't do this. This is not what you want to do at all. Now, what we're doing here is we're using the 1-minute time frame, and we're taking a lot of these levels from this time frame to give us a better understanding, not with this chart, but to usually give us a better understanding of where price is most likely to either slow down or reverse its trend. Now, if you were to look at this chart right here and you were to try and trade this, these levels are so tight together that even if you saw a good trade, well, you're going to get analysis paralysis and say to yourself, well, there's a level right overhead. Guys, not every single level is created equally. If your charts look like this and you know who you are, stop. But now that we know that this is really not the way to do this, let's go over an example of how to effectively do this if you are a beginner. Now, for those of you guys that are more advanced, you can have more levels on your charts, but what you need to understand is that they are not exacts. None of this is going to be an exact price point of where price could go and start to reverse or start to slow down. You have to think in generalities. It's almost like a flashing sign that's showing you, okay, this is an area on the chart where price has made a big move in the past or it has reversed in the past. This is something that you then have to pay attention to, not necessarily say, oh my God, drop everything and do something just because of this line on the chart. I hope that makes sense to everybody. So let's go back to this Tesla chart right here and delete some of these levels. Now, what I want you guys to look at here, and this is how I draw my levels every single day, and this is how I want you guys to be doing this too. I follow the rule of 2 to 3. 2 to 3 levels from the daily, 2 to 3 levels from the 4-hour, and 2 to 3 big levels off of the 5-minute time frame over the last few days. So let's look at this daily chart right here, draw our levels, and go over how we would then trade based off of these levels. So looking at this Tesla chart right here, it does look as if we have support right around this area at around 152. That is going to be a very good level to draw, and we are going to see a little bit later why this level is better on a shorter time frame. So looking at this right here, we have our first level. Now, what's the second level that we need to look at? Well, we saw this aggressive price move to the downside and then a pretty aggressive rally up, and now this is still trading relatively near current price action, so I would put this level out on the chart as well, right around here. Now, we also see some pretty heavy resistance right around this 200 EMA on the daily time frame, and again, just like how we like to say, you want to think in generalities and not so much exacts. Looking at this chart here, I would probably draw this level right around here. So that is going to be about our 3 levels from the daily time frame. Now, what I want to look at next is the 4-hour time frame. So moving down to the 4-hour, we are going to get a lot more levels. Something that you guys are going to understand here is that as you start to move down in your time frame, you're going to see more levels. Now, every single longer time frame level is going to be slightly stronger than a shorter time frame level. That is a very, very, very key concept. Now, the other thing that you guys can do here is that if you want to color code your daily levels, all of these levels on the chart right now are from the daily. You can click on this one, you can change the color to yellow if you want to, and you can say to yourself, okay, any level that I see in yellow is coming from the daily time frame, and this could be a stronger level that I need to pay attention to a little bit more. So let's actually do that for the purposes of this video here. So we come and make all of these levels here in yellow, and then let's go back to the 4-hour time frame and actually do some more analysis here. Now let's change the 4-hour time frame to, let's say, blue. Now, are there any other levels that are glaring at us right now that we need to take a look at? Well, not necessarily. We do see a lot of support in this range here. We do see it a little bit here as well. So again, as you get into the 4-hour time frame, you can be a little bit more picky with your levels. Yes, this 176 looks like it could be a decent level of support here. So let's actually draw this level here, and then let's put this level, this little double bottom right here as well. So now that we have our 4-hour time frame levels, and I believe this one was from the daily as well. Yeah, because we only have 2 on yellow. So that was a daily level. All 3 of these are from the daily. And again, 2 or 3 from the daily, 2 or 3 from the 4-hour, and then 2 or 3 from the 5-minute time frame within the last couple of days. So now that we have completed our daily and 4-hour, what do we do next? Well, we move to the 5-minute time frame. So let's change this to the 5-minute, and you guys can see now, okay, well, price is consolidating right up here at this daily level. This could be very important. We have another daily level down below. Now let's zoom out a little bit. We have this 4-hour level up ahead over here. So these color coding of these levels can give you guys a lot better of a picture than this nonsense that you see on the chart right here. So now let's look at Tesla on the 5-minute. So you can see that on the 5-minute, it is respecting these daily levels. Remember, the levels from the daily are going to be incredibly strong. The levels from the weekly are going to be a little bit stronger than the daily as well. So from the 5-minute level here, you can see that there's a lot of support in this range right here. Now, the last lines that we were drawing in blue, so let's actually draw these in red over here, just to give us a little bit of a nice color contrast. So we have this level right here, and then we could also use, let's say, this one right here where price was reversing pretty aggressively. So now we have all of our levels. What are we looking for next? Now, what a lot of retail traders will do is they will see price come down to their level and they will blindly buy it. They will say, oop, touch the level, I'm going to buy. That is not something that you need to do. Remember, guys, generalities, not exacts. Just because prices come down to a level does not mean that it is going to reverse. Is it possible that it does? Absolutely, but you need to look for more confluences in the chart in order to see that price is actually going to be using this level as a reversal point or support and resistance. Now, the other thing that I want to point out as well is that when a level is broken on, let's say, the daily or the 4-hour time frame, and you get a closing candle down below, that area of support, the previous area of support or resistance, can become the opposite new support or resistance. So an example of this is that if you see a level, let's say right here, let's just do this little hand motion. You see a level right here, you get a closing candle down below. This was the previous support. Price is now most likely going to use this as new resistance. That is a very key concept that I want you guys to understand as well in terms of retests. Now, let's go over exactly how we would trade some of these things here. So, going off of this Tesla chart right here, we can see from the daily time frame that this level down here has been respected many times. We go back to the daily and we can see that this daily Tesla level on this lower end has been respected a couple of times back down in here. Now, going back to the 5-minute time frame, how would we trade this? Well, you can see that again, price comes down to this level on this day, but you can't just necessarily blindly buy this. You do see RSI overcooked on this 5-minute time frame here. It is starting to break above its moving average. That's a good sign. If you are a master level member of our Trade 1348 platform as well, you also have access to thigh gap. What happens with thigh gap here as well? You see it go from dark to light. Another key point that says price is most likely going to reverse from these levels here. Now, guys, going into these days every single day, having these levels on your chart are incredibly important. Do you guys see how much better and smoother and a lot easier your charts to read are like this when you draw 2 or 3 levels from the daily, 2 or 3 levels from the 4-hour, 2 or 3 levels from the 5-minute over the last couple of days versus this nonsense right here? It's a night and day difference. So the last thing that I want to touch on with you guys before we wrap up this video here is that you also have to understand that sometimes price in these giant levels of resistance, even on the longer time frames, may not be as important as you think they are. An example of this is, let's say there's a CPI day or an FOMC meeting day where prices of all different equities, the stock market is just ripping. Nailing it to the upside, just absolutely going on an absolute moon mission. Well, if Powell or the CPI data comes out that day and it ends up being terrible and the market tanks, well, does that necessarily mean that that level overhead is going to be clear-cut support or resistance? No. Because there was something extraneous going on in the market that nobody really expected to happen. Now, it's still very helpful to have that level on your chart saying, okay, this was the CPI level or the FOMC level that the market really reacted to. But again, you have to put these things into context. So guys, that is going to wrap up this video here. If you did enjoy it, make sure you guys drop a like down below. Remember, use code GAINS on the Trade 1348 platform. Other than that, have a great rest of your day. Peace.